2 months ago, US-based short seller Hindenburg Research released a scathing report against the Adani Group. Gautam Adani, who was the world's fourth richest man back then, was accused of running an empire that engaged in brazen stock manipulation, accounting fraud, and improper use of offshore tax havens. The research firm also warned investors against the group's high debt and overvaluation to the extent of 85% in some group stocks, and the stocks plunged. The counter of Adani's flagship company, Adani Enterprises, tumbled from around Rs 3,400 to nearly Rs 1,017 in a matter of days. Gautam Adani has lost nearly 3,000 crore rupees a week in wealth, suggests an M3M Hurun India Rich List report. The accusations, however, have been denied by the conglomerate. Meanwhile, the group has taken several measures to regain investors' trust since then. Some of these include full prepayment and repayment of immediate share-backed finances, issuing clarification on the role of Vinod Adani, the elder brother of Gautam Adani, and reducing promoters' stake by bringing Australia-based GQG partners on board. It also put some capex projects on hold. But have the steps yielded results that the group wished for? And is the worst over for the group?
Initially, they have ring-fenced the promoter group from any kind of financial mishap that could happen, right? So having strengthened their own position, they have ensured that they have regained institutional confidence and to a large extent shareholder confidence by repaying back their debt in their personal capacity as promoter group. They just did a kind of an introspection. They realized that, they do 50,000 crores plus of EBITDA every year, which is good enough to fund their existing debt, interest payments, and also lead to completion of the existing projects. So what the company is doing is that the projects which they have taken on, they are completing, okay? They're consolidating. And if they continue in this state for, let us say for the next possibly, 8 quarters, their balance sheet is going to look extremely, extremely strong.
At the bosses, the steps have stemmed the shares' free fall, at least for now. From their recent lows, the stocks have bounced back in the range of 2 to over 100%. However, there could be further downside if the uncertainty persists.
I think the stock market, as far as the prices are concerned, I don't think anybody can argue that they're still very, very cheap. But I think quite a lot of excess fat has burnt off. So therefore, I think there is some stability as far as the stock market pricing is concerned. There could be certain further downside. But if you really see the new ones that they have bought, which is cement, that they bought very recently. So therefore, and there are very good comparables for that. So therefore, I don't think there is too much of a downside to the cement business, because there are others which are probably as well valued or even better valued. So therefore, that's a very good business, very good cash flow business. So I think that I think has reached probably its level. The other stocks, one could argue that there is further sort of valuation correction possible.
Going ahead, analysts say Gautam Adani needs to shore up equity capital, remain in growth neutral mode to sustain cash flows, and raise funds via divestment. The report, analysts said, has pushed the once aggressive Adani Group into a consolidation phase. With concerns still looming, the stocks may not guarantee excessive returns for investors in the near term. Today, global developments and fund rotation ahead of the closure of the financial year will sway the markets.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.